Hi, everyone. This is Brett Bussell, Managing Partner for ACA Prime. Thanks for joining us today. We are here to present a quick 15 to 20-minute overview of ACA Reporting updates for 2016. And just a quick notice, this presentation is a review of certain reporting requirements per Section 6055 and 6056 of the U.S. Internal Revenue Code. It is not intended as official, legal, financial, or tax advice. Today's topics: what's new in 2016 per the latest draft guidance from the IRS? Go through around 10 examples of 1095C coding and lessons learned, the updated deadlines and penalties, and then the next steps for getting help with your ACA reporting. Again, our estimated time is 15 or 20 minutes, so please feel free to review what's ahead over here and pause, go back, fast forward through the different examples that might pertain to your specific situation. First off, I just want to discuss very quickly, there's been a lot of confusion around this, but is the data in Forms 1094C and 1095C protected health information or FI as per HIPAA? The answer is no, it is not. That said, almost every state now has a separate data breach law to protect personal information. This definition varies state to state. Depending on your state and depending on the information contained, the particular 1095, a 1095 could contain personal information. Some states may require security measures to protect the data, such as encryption, and some states may require notification to individuals and the state's attorney general in the event of a data breach. All that said, use good security practices. Do not send Social Security numbers or any other sensitive information in unencrypted email. Use best practices, use HTTPS security, use ShareFile, use encrypted email, but definitely do not send unprotected sensitive information through insecure channels such as email. If you have any questions on this, please contact us and we can review your security policies and let you know some good ways to handle transmitting and storing your sensitive data easily and efficiently. So, what's new in 2016? There is no more good faith effort. Good faith efforts are gone, as we said. Last year, penalties could be waived if an employer showed it made a good faith effort to comply with the regulations and deadlines. That good faith effort standard is going away. This year, employers will have to show reasonable cause if they fail to comply in order to receive any relief from penalties. There's no more qualifying offer transition relief. Form 1094C, the line 22, box B, is now labeled as reserved. There is a new reminder of ACA's full-time employee definition. The text section 4980H was inserted on Form 1094C, Part 3, Column B. And finally, there's a new term, Employee Required Contribution, or ERC, for line 15. The new term is introduced in draft instructions to better explain the amount that should be entered on Form 1095C Part 2, line 15. The ERC is the employee's share of the monthly cost for the lowest cost, self-only MEC plan providing minimum value offered to the employee by the ALE member, whether paid through salary reduction or otherwise. Continuing on, what else is new in 2016? Codes 1I and 2I are no longer used and are reserved, but we have two new codes for line 14, 1J and 1K, and we have examples on them here in a couple slides. Note that the plan start month box will remain optional on the 2016 Form 1095C. Very quickly, 1J is MEC providing minimum value offered to the employee, and at least MEC conditionally offered to spouse, but MEC is not offered to dependents. And 1K is similar, but actually offering the dependents coverage. So MEC providing minimum value offered to employee, and at least MEC offered to dependents, and at least conditionally offered to spouse. There are also some clarifications, new guidance on COBRA reporting, which we'll go through in examples. And finally, just very quickly, A conditional offer is an offer of coverage that is subject to one or more reasonable objective conditions. And we'll get to that here in a slide or two. Just a few notes on transition relief. This year, the non-calendar year transition relief for plan years starting in 2014 that applied in 2015 will no longer apply. The instructions also made changes to Section 4980H transition relief. This relief is exempted applicable large employers from 4980H penalties and reduced the mandatory coverage offering thresholds from 95% to 70% of full-time workers. It also exempted aliens from having to offer coverage to dependents if certain requirements were met, that is. For 2016, this relief is still available for non-calendar year plans through the end of the plan year. But the relief is not available for calendar year plans in 2016. These plans must meet the 95% threshold and offer dependent coverage during each month of the plan year. Very quickly, just lessons learned from 2015. It is always good to document, communicate, and evaluate. Understand your eligibility conditions and when somebody becomes eligible. Understand method for determining full-time status and how to count your full-time employees. And also understand the different affordability safe harbors available to you in your reporting. Okay, we will move on to the example section. Go through the new code, some COBRA examples, and then through some miscellaneous examples that companies often struggled with last year. So, the new code, 1J, conditional offer code. Example, a full-time employee is offered MEC that meets minimum value. An offer of coverage is also made to a spouse, but only if not eligible for a group health plan sponsored by another employer. So make sure you read that section there. Dependents are not eligible. So in this example, the blue here, we have a full-time employee and spouse enroll all 12 months. Even if the spouse does not enroll, this is how it would be coded. If your line 14 of 1J has the offer code, your IRC is 9849, and then they enrolled, so you get a 2C. Okay, 1K example. A full-time employee and dependents are offered MEC that meets minimum value. An offer of coverage is also made to a spouse, but only if they're not eligible for a group health plan sponsored by another employer. So in this example, you have the full-time employee and spouse and dependents all enroll for 12 months. So similar to the previous example, this one uses a 1K instead of a 1J, and the IRC and the line 16 remain the same. COBRA, new guidance per the draft instructions. Definitely a lot of problems around reporting COBRA last year for many employers. For terminated employees, coverage should be reported on the Form 1095C as no offer, i.e. Code 1H, on line 14, and employee not employed is Code 2A on line 16. For employees that go to a part-time status, offers of COBRA coverage should continue to be reported as in 2015. So we'll go through some examples here on COBRA. And this is based on a calendar year plan. Applies to fully insured and self-funded plans regardless of if the individual enrolled in COBRA or not. So here's our example. If a full-time employee, spouse and dependent, enrolled January through August, terminates employment August 15th, 2016, then enrolls in COBRA remainder of the year. So this is for a terminated employee. Notice that the transition month, you'll have the 2B there, and then no offer of coverage is made and a 2A. All that said, for a self-funded plan, they must indicate the months that were covered by COBRA. You'll see those here. If they, in effect, enrolled in COBRA. That's for self-funded only. This is section 3 of the 1095C. COBRA example 2. You have a full-time employee, spouse, independent, or enrolled January through August 31, change the status part-time to part-time September 1st, 2016 offered and enrolled in COBRA remainder of the year. So the difference here is they are still part-time employed, so you still are offering them COBRA. The IRC goes from the minimum required value, which is here, to the value required by COBRA, and they still enroll, so that is 2C. So that is a little bit different. Again, this is all from the guidance from the IRS. COBRA example 3, same thing, but they are offered but decline the COBRA enrollment. So you see, they're still offered September through December, but instead of a 2C, you get a 2B for these months, as they were part-time and did not enroll. Here's an example for a part-time employee, COBRA beneficiary, or retired employee. So a COBRA beneficiary from January 1st of 2016 through July 31st of 2016, but drops COBRA August 1st, 2016. So they get the 1G code, and this only applies to self-funded plans. That's for line 14, 15, and 16 remain blank. And then section 3 for this example would look like this: covered, 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 and then finally they drop coverage in August, they would go to not covered. Variable employee. No, only report on variable hour employees if determined to be full-time after the measurement period. I think that makes sense. So we have a variable hour employee determined to be full-time after the measurement period and enrolls at 2016 open enrollment. Note the non-calendar year, plan year of October. So no offer made, they qualify and are offered in October. Put in the ARC there, and the 2C indicates that they enrolled. The 2Ds over here indicate that they were not a full-time employee. Okay, another example. We have a variable hour employee determined to be full-time after the measurement period and declines offer of coverage in October. Same example as before, but this time the only difference is your safe harbors most likely will apply to either 2F or 2H. Everything else would be the same. All right, and yet another example. I think this is our final one. We have a full-time employee enrolled January through September, terminates employment September 10th, 2015. So line 14, offer of coverage Jan through August. The year stays the same, and then they enrolled 2C. In the transition month, it's a 2B, then they have the 1H and 2A. So a few other notes: employee forms are not to be attached to their tax return and are for their information only. Employer filing extensions are available for 2016. Let's talk deadlines. Very important. Pretty much you need all the data for your reporting by the January 31st, 2017 deadline. Basically, this is the time to mail or distribute the 1095s to your employees and recipients. Again, we consider this the primary deadline. The filings, the e-filings or paper filings do take place afterward. Again, this was moved last year, and we have no reason to believe that the IRS is going to move it again this year. If you are filing by paper, and as you most likely know, you can file by paper if you have less than 250 forms. If electronic filing is due and is required March 31st, 2017 is required for companies with 250 forms or more. And basically, we e-file basically everyone, just FYI. And just keep in mind, our guidance, if you are using us, the latest you'd really want to get so we can make the January 31st deadline to get the forms out in the mail to your employees would be January 25th. But earlier is always better. Quick review on penalties. Went up a little bit. Just $260 per return for failure to file correct and on-time return. It's also a $260 penalty for failure to furnish a correct employee statement. So this combines up to $520. You see the maximum, basically $3.2 million for here to failure to file correctly, $3.2 million for failure to furnish correctly, and then that combines up to a maximum of about $6 million. Just a quick record-keeping reminder: retaining complete and accurate records helps move the audit process along, if any, provide an accurate picture of your employee benefits, and reduces liability. Keep copies of participant notices and record records showing distribution. As a general rule, save your records for at least 7 years. If service providers keep records, fiduciaries must regularly verify retention and availability and security. And finally, just a real quick overview of our services. It's not only ACA reporting and tracking. We do help with Form 5500s, draft documents, compliance review, and other technology solutions. And to contact us about your ACA reporting, tracking, and compliance needs, please reach out to me, Brett Bucell, Brett@acaprime.com, www.acaprime.com. You can give us a call at 844-GET-1095. That's 844-438-1095. There's always more resources available on ACA and related compliance topics at acaprime.com/ACA-resources. Thank you for joining me today. Hope you found this review helpful. Please reach out to us if you have any further questions. Have a great day, and I will hopefully be speaking to you soon.